The stock market is hitting a record high. People who have invested at the bottom of this crash doubled or in some cases tripled their money. Think about it. It took you 10 years to save $100,000 and you had the opportunity to save yourself 20 years and triple your money in just 5 months. I'm not even exaggerating. The exact same Tesla stock that used to cost $500 6 months ago now worth over $1,500. However, a lot of people miss this opportunity, which comes once in a decade, simply because they don't know enough about the stock market. So if you're an investor, please skip this video because we will cover the basics of the stock market. What exactly is a stock? How does the stock market works? How to buy a stock? How to find good stocks that will earn you money? But before we start, make sure to give this video a thumbs up, and if you want to learn more about the stock market, you can join our community of investors on Patreon. Here is a simple way to understand the stock market. Suppose you come up with an idea of selling stuff online. You hire a bunch of developers to build the website for you. For the sake of simplification, let's say you decide to name your website Amazon.com. It's a simple and creative name that accidentally crossed your mind. To make things easier, let's say you start selling books. Lucky for you, business is going awesome, but you have a problem. You're making money, but not enough to expand fast. Theoretically, you can start selling everything on your website, from electronics to kitchen equipments, but you need the capital to rent a place and build your infrastructure. If you're not going to do that, your competitor might take advantage of that and will crush you. But don't worry, here is a brilliant idea. You can sell a portion of your company and use that money to expand your business. Let's say your company is valued at $100 million. Divide your company into 1 million stocks with each stock priced at $100. Let's say you could convince an investor to buy 100,000 stocks for $10 million. Congrats! Now you have the money to expand your business, and that investor gets a 10% stake in your valuable business. You're doing great, your business is growing fast, but you want to expand even faster. Since you have made a name for yourself, there are tons of people in the country or even worldwide who want to buy a small piece of your company. But you can't simply sell pieces of your company from your office. You need to list your company in a place called the stock market. It's a market for companies where people come to buy and sell small portions of companies called stocks, such as the New York Stock Exchange or the Nasdaq. Since you own 90% of your company, let's say you list 200,000 stocks on sale in the market and raise millions to expand. Of course, we have oversimplified everything here, but that's the general idea. But most of the stocks in the stock market are not sold by the companies directly, but rather by people who have purchased them when the company listed their stocks for the first time. That's known as IPO, Initial Public Offering. If you hit the stock market to buy some Apple stocks, you probably won't be buying them from Apple directly, but from someone else who owns a bunch of them and wants to sell them. Maybe he purchased them last year and the price has doubled since then, and now he wants to sell them to make a profit. Unfortunately, you can't get into your car, drive to the stock market, find an Apple store and buy some Apple stocks. That's not how it works. You need the middleman who has a relationship with the stock market. They are known as brokers. It can either be an individual or a firm or even your local bank. It's pretty much like real estate. You can't purchase a house directly from the previous owner. You need someone who is licensed to buy or sell real estate, such as a real estate agent. So if you want to buy Apple, Amazon or whatever shares from the stock market, you need to find a broker. Usually, they have to get paid for their hard work for helping you to buy or sell stocks by charging you a small commission fee. It could either be a fixed amount per trade or a fixed percentage of the total trade. Most banks today also provide such a service, but recently there has been a lot of innovation in this industry. In 2013, two guys from California launched an app called Robinhood, a broker agency that made buying and selling stocks possible from the comfort of your smartphone. The best part of it is that it's absolutely free. Now, since you know what exactly is a stock and how to buy one, you're probably wondering, why should you buy stocks at all? I mean, why would you give the money you have earned with blood and sweat to this multi-billion-dollar corporation that makes so much money that they can buy entire countries? Well, let's say hypothetically, Company A produces and sells cars and has a total number of 1,000 shares or stocks, where each share costs $100. So the total value of the entire company is $100,000. If let's say next year Company A builds another factory, hires more people, and eventually sells more car, the company's total value will rise, let's say to $130,000. But since the company consists of 1,000 small pieces called stocks, where each cost $100, individually each stock will increase by $30, since the company as a whole rose by 30%. So if you have purchased one stock from Company A last year for $100, today it would worth $130. You can sell it and make a profit of $30. In other words, when you're investing in the stock market, you are buying portions of businesses which are called stocks, and as these businesses grow, so the value of your stock. But you may wonder, if by buying a stock I become an owner of a certain portion of the company, shouldn't they share with me the profits the company make? Yes, they have to. They're known as dividends. Apple, for example, paid a dividend of over $3 for each stock last year. By now, you probably think that instead of saving money, I can buy stocks and my wealth will grow. Theoretically, yeah. One of the companies that grew really fast in recent decades was Apple, since iPhone sales were increasing year after year. In 2014, a single Apple stock used to cost around $100. 6 years later, as the company kept expanding and introducing more products and increasing their sales, the stock price rose to $379 at the time of me writing this script. In other words, your $100 invested in Apple would worth $379. When you buy a single share, it doesn't make a big difference. But let's say you have invested $100,000. Your investment would worth $379,000. You've more than tripled your investment in just 6 years. But before you throw your money into the stock market because it looks so easy, hear me out, because there is a catch. Not everything is sunshine and rainbows, because these stocks are listed on the public exchange. The number of factors that influence the price of the stock are too many, and often the price of the stock does not represent the real value of the company. Let's say hypothetically, there is an electric car company that gets a lot of hype around it. For the sake of simplicity, let's call it Tesla. The company might generate a lot of hype around it because its CEO is a marketing genius. A lot of people might get excited and start purchasing Tesla stocks. And according to the laws of economics, when the demand outweighs the supply, the price increases. The price might double or triple in a matter of a few months, but its real value did not double or triple in such a short period of time. The demand artificially increased it. In the last 6 months, Tesla stock increased from around $500 to $1,500. Tesla is a great company and is doing great stuff, and it will probably be super profitable sometime in the future. But from an investment point of view, the stock price today does not represent the value of the company, which means it's overvalued, which means sooner or later the price will fall to its true value. As an investor, you either want to buy stocks of companies that represent their true value or stocks that are undervalued, because both will rise in the future. Of course, that's not an easy job. You have to analyze companies, read their financial statements, assess their business models, and make a rational decision based on facts and numbers, which is what we teach here on this channel. However, if you want to know where I invest my money, you can follow me on Patreon. You will be the first to know where I invest my money. I will explain why I have invested in that company. You can ask me questions and I will gladly answer all of them. Other than that, thanks for watching and I will see you in the next one.